Hello and welcome. I'm Pallavi Sharma and you are watching BIZWORLD Weekly, a show that brings you detailed analysis of top stories of the week that you probably missed out on. Let's start with the market check. Indian equity indices ended on a strong note with Nifty about 22,800 points on April 11 and Sensex was at 75,157.26 points. Sensex was up 1.77% and Nifty was up 1.92%. The biggest Nifty gainers included Hindalco, Tata Steel, JSW Steel, Coal India, Jio Financial, and losers were TCS, Asian Paints, and Apollo Hospitals. All sectoral indices ended in green, with metal index rising 4%, while auto, oil and gas, power, PSU, telecom, pharma up 2% each. Gold prices saw an uptick today. Gold prices in Mumbai were at 8,825 rupees per gram of 22 karat gold and 9,266 rupees for 24 karat gold per gram. Donald Trump has flipped once again. He pressed the snooze button on recession. On April 9th, when the reciprocal tariffs went into effect, he suddenly rolled them back. This after he said that he would stand tall and not go back on his decision. In any case, he announced a 90-day pause on the discounted reciprocal tariffs that he announced on April 2nd for all countries except China, keeping 10% baseline tariffs intact. Instead, for China, there was another bomb. He imposed 125% additional tariffs on China, which, by the way, added to the earlier tariffs that were levied on Chinese goods before Trump took charge, comes in at 145%, and that effective immediately. He said that it was due to lack of respect that China has shown to the world's markets and because it retaliated too soon instead of peacefully talking and making a deal. So while every other country was cheering, China was feeling the FOMO. It was left out. But the question is, what made Trump roll the tariffs back? Was it the stock market? Well, not really, but a pressure from investors, yes. You see, the tariffs triggered fears of recession, and then there was sell-off in the US government bond markets. The US Treasury Secretary and the White House officials also raised concerns of a sell-off in the bond markets. What are bonds? Well, government bonds are like government-issued securities that you buy, and instead the government pays you an interest. Say like a fixed deposit with the government, which gives you a fixed interest. But if there is a sell-off in the bond market, the prices of government bonds come down, which means that the investor trust in the country is losing. And thus the interest rates on these bonds that the government has to pay goes up. Bond yields went up overnight after the tariffs were announced, and that's not a good situation for the Trump administration. It's more spending for them.
Bond market is very tricky. I was watching it, but if you look at it now, it's beautiful. The bond market right now is beautiful. But yeah, I saw last night where people were getting a little queasy.
Second, to isolate China. As per reports, the president and his advisors agreed that China's decision to impose retaliatory tariffs on the United States gave them an opportunity to pause tariffs on other countries as a token of friendship and isolate China. These increases in tariffs are expected to impact the Chinese economy and the growth to 4% from 4.5% as per Goldman Sachs. Other countries too are acting against China to make sure that they are friends with the US. As per reports, Vietnam is eyeing a crackdown on some China trade. It is preparing to cut down on Chinese goods that are shipped to the US via its territory and will tighten controls on sensitive exports to China. But this could backfire. US is reliant on Chinese goods, and finding an alternative so soon is not going to be very easy. Even for automakers and companies like Apple who manufacture in China, it's going to be an issue. Reports say Apple flew 5 planes full of iPhones from India and China in 3 days to beat Trump tariffs before April 2nd. Third, and most importantly, Trump has probably won this battle. He, in a speech, said that he's getting back-to-back calls from the world leaders who are dying to make a deal with him. Here's what he said earlier.
They are dying to make a deal. Please, please, sir, make a deal. I'll do anything. I'll do anything, sir.
So now Trump can get what he wants as countries are giving concessions or trying to negotiate. With Trump pausing tariffs for 90 days, countries are rushing to crack a deal, and India is one of them. India says it wants a quick deal with the US. Commerce Minister Piyush Goyal says that the deal is expected in less than 90 days with the US, and he assured exporters that it will be the right mix and right balanced deal. In FY24, US remained India's largest trading partner, accounting for $119.71 billion in goods trades. Sectors that were impacted highly by these tariffs were electronics and gems and jewelry. A 26% additional tariff was imposed on India on April 2nd. It is a relief for these sectors as of now and for the markets too, but just for 90 days. If India does not crack a deal, what happens is uncertain. In February, India and US agreed to work on the first phase of a trade deal to be concluded late this year with a view of reaching two-way trade worth $500 billion by 2030. Goyal even agreed to Trump and said that the world has suffered from China's unfair trade practices over years. Meanwhile, India is also looking at diversifying its trade because tariff fears still loom, as Trump says that a big tariff strike on pharma sector is incoming, which impacts India significantly. Finance Minister Nirmala Sitharaman is in the UK to crack a free trade deal with the country. As per reports, 90% of the work is done. Another deal is taking place between the EU and India. They say that a deal will be finalized before 2025. And with China being hit by 145% tariffs, India has a big opportunity. The world and the US will need a manufacturing alternative, and India is the place. But it needs to ramp up its manufacturing structure, the tariffs and regulatory issue. Because last time, other Asian countries grabbed onto this opportunity and benefited more than India before the pandemic due to these rules. Meanwhile, China, which is the manufacturing hub of the world, is panicking. So much so that the Chinese electronic companies are now offering price reductions of up to 5% to Indian companies as a part of new sourcing contract negotiations after US-China trade conflict. Now, these are the electronic companies. So we are basically talking about phones, TVs, fridges, and more getting cheaper for Indian customers. So here too, India stands to gain as China is now left with surplus inventory, and this will flood into other markets at cheaper rates. There is an opportunity. There are deals which are converting as fast as possible. So this is the time to get to work. Will India be able to grab onto this opportunity? Time will tell. In just 1 week, the US markets saw the first biggest fall since 2008 and then the biggest gain since 2001. Markets were on a roller coaster this week and investors were busy figuring out the market volatility. On April 2nd, Trump announced reciprocal tariffs. On April 9th, when they were going to effect, he rolled them back. Markets fell significantly on April 2nd after the announcement, S&P 500 over 6% on some days. On April 9th, he then rolled them back, except the baseline 10% tariffs, and markets cheered. In fact, S&P 500 saw the best day since 2008, Dow Jones best day since COVID, and Nasdaq Composite best day since 2001. So Donald Trump is now facing accusation of market manipulation for obvious reasons. So here's what happened. Just after US markets opened on April 9, Trump posted on Truth Social, "This is a great time to buy DJT." Less than 4 hours later, he shocked the world and the investors by announcing a 90-day pause on reciprocal tariffs on most countries except China, keeping the 10% base tariff effective. This led to a massive spike in stock markets. S&P 500 closed by more than 9% on April 9. The Nasdaq Composite up more than 12%. Asian markets also surged. Earlier too, he spoke about how his first term had the stock market going up by 88%, and he said that it would be a bigger spike this time. Well, usually Trump does not sign off his post by his initials, but he did this time, and those were the same letters as the ticker for Trump Media and Tech Group, whose stock shot up by 22% on April 9th. The Democrats now have questions. Democratic Senator Adam Schiff has called for an investigation. Chris Murphy also wrote on X that insider scandal is brewing. So people who knew ahead of time, they would have made money, is what he said. Former White House ethics lawyer Richard Painter questioned whether Trump's social media post violated securities laws as per reports. Democratic Senator Elizabeth Warren also called for an investigation, and here's what she said.
And right before Donald Trump declared that some of his tariffs were off again, he sent out a message to his billionaire buddies. He posted, "This is a great time to buy," in all caps. Was that market manipulation? Was it corruption in plain sight? We need an independent investigation into market manipulation because Americans need to know.
The White House, however, has argued that the shift was a part of a strategy all along, arguing that it was an art of the deal work. Now, several investors have used the market volatility in recent weeks as a buying opportunity too. US Representative of Georgia, Republican and Trump ally Marjorie Taylor Greene disclosed that she had made several purchases on April 3rd and 4th, including tech stocks like Amazon and Apple, and those companies rose 12% and 15% on April 9th. Well, insider trading, a serious issue for the president right now. But what are your thoughts on this? Let us know in the comments. Before Trump flipped, tariffs had hit billionaires across the world hard except one. Warren Buffett, he was the only billionaire among the top 500 richest people on earth to increase his net worth in 2025. As per Bloomberg Billionaire Index, 499 of the 500 richest people in the world lost money after Trump enforced tariffs. While Elon Musk, Jeff Bezos, Mark Zuckerberg all lost billions of dollars, Buffett's wealth surged $12.7 billion before Trump rolled back his tariffs, as per reports. Even now, Buffett's wealth grew by $8.1 billion on April 9 after the market saw the biggest gains in a long time when tariffs were rolled back. But how? Well, Buffett sold off large stock positions including Bank of America, Citigroup, Apple and Davita. He also sold ETFs from Vanguard and State Street and increased his cash reserves to $325 billion. So in total, his company offloaded shares worth $143 billion. The cash had come out of all this. Now it makes up about 1/3 of Berkshire Hathaway's $4 trillion market cap. While people were wondering why he's sitting on a huge cash pile, Buffett was thinking smart, because cash lets you make bold moves when the fear in the market is over. So basically, when the stock market shed trillions on April 7th, he probably told the world, "I knew it." In February, he said in his annual letter to Berkshire shareholders that he is bullish on 5 Japanese trading firms, and that's where he probably is seeing value right now and selling American stocks. Known as the Oracle of Omaha, Buffett has once again proved that his instincts were right. Once again, because back in 1999, when the dot-com mania was peaking, Buffett sat out. Tech stocks were flying, but looked like Berkshire was playing old. But then the bubble burst and Buffett survived and scooped up bargains when others nursed losses. In 2008 financial crisis, he went on the offensive route. He bailed out Goldman Sachs and General Electric through stock deals that earned him billions and escaped the crash too. Even during COVID, when things were not going well, he stayed cautious. Berkshire's long-term bets and Charlie Munger's clarity helped the company deliver a whopping 20% CAGR from 1956 to 2024. Which means that 100 rupees invested with Buffett in 1965 would have been over 46 lakh rupees today. So what do we learn from this? You don't need a $1 billion portfolio to think like Buffett. You have to be aware, look at the values, think long term and be cautious. For a man who has held Coca-Cola and American Express for decades, short-term stock swings don't seem to bother him, but his move now signals something bigger, a broader shift in how he is viewing the market. Buffett has always advocated for long-term thinking, and now he might be waiting for an opportunity to reinvest and will give him massive gains. But all in all, the old man of Wall Street has won once again. STEM students in the US from India and elsewhere are facing the threat of having to leave the country once their studies are over. STEM meaning science, technology, engineering, and mathematics. A bill was introduced in the US Congress this week to eliminate the optional practical training work authorization or OPT. Now, this OPT allows them to stay in the US for up to 3 years after graduation and find a job. While all previous attempts have failed, this bill comes at a time when series of anti-immigration moves are in place, including mass deportation by Trump's administration. The development has panicked the existing F1 and M1 student visa holders who are frantically applying for a job now that can transition them to a H-1B visa, is what the experts are saying. As per a report, there were over 300,000 Indian students in the US in FY24, the academic year of 2023 to 24, with close to one-third of them eligible for OPT. As per reports, if the bill goes through, OPT will be abruptly end without an option to transition to another work visa, and the students might have to leave the US immediately. Reports say that the likelihood of OPT being scrapped is taking a toll on Indian students. Indian students are reportedly cancelling plans to return home on breaks this summer over fears that re-entry may prove difficult. Columbia and Yale have unofficially advised overseas students not to leave the country because of high scrutiny. Officials are now checking your phones and social media before deciding on whether to give you a visa or entry into the US or not. More and more visas are getting cancelled and more people are getting arrested and deported too. US, however, still leads study abroad destinations for Indians, but there has been an increase in applications to Canada and Europe too. There has been a 20% uptick in Indian applications to non-US destinations for upcoming 2025 to 26 academic year, as per experts. Why does India not have an AI model like DeepSeek yet? Well, India's Commerce Minister Piyush Goyal sparked a debate after he took a dig at Indian startups. It evoked strong reactions from some entrepreneurs at the Startup Mahakumbh earlier this week. Goyal urged entrepreneurs to explore more innovation in technology in order to help the country progress. Taking a dig at the food delivery and lifestyle businesses, he said, and I quote, "What are India's startups of today? We are focused on food delivery apps, turning unemployed youths into cheap labor so the rich can get their meals without moving out of their houses. Only 1,000 startups in India's deep tech space is a disturbing situation." He further added, and I quote, "Do we have to make ice cream or semiconductor chips? Dukandari hi karni hai," is what he asked. Are we going to be happy being delivery boys and girls? Is this the destiny of India? This is not startup, this is entrepreneurship. This is what he said. Most startups did not take it well. Zepto co-founder Adit Palicha, in a post on X, argued that it was commerce internet companies like his that have led innovation in the technology space in India and globally. He pointed out that Amazon scaled from one and now is a big player in AI. Mohandas Pai told ET Now that there was a dearth of capital investment in deep tech startups from the private players. Deep tech innovations take a long time to deliver returns, while quick commerce gives quick returns, is what he said. He even criticized Goyal on X. Many entrepreneurs spoke out about the challenges they faced when they tried to start their own business in India, like getting loans, import duties, and more. But some came in support too. Founder of Proxy Gyan, an edtech app, agreed that India's future leadership of the global economy depends on breakthroughs like AI and semiconductors, but there were realistic barriers and government should help ease them. Indian investor Kushal Bagia also said in a tweet that Goyal was right about the lack of deep tech in India. He attributed this to India's tech talent leaving the country to work for the US. Well, as per reports, in 2023, just 5% Indian startup funding went into deep tech compared to 35% in China. In 2024, China slashed $361 billion in taxes and fees for high-tech companies, including some concession for research and development. A NASSCOM report suggested that there were 400 deep tech startups in India and that the number is likely to jump 10,000 by 2030. This is what Goyal quoted. Now, this India-China comparison came as Goyal also compared the two countries in his speech. Reacting to the criticism, Goyal said that it is sometimes important to shake up an ecosystem to make it realize the urgency of the situation. What do you think of this? Let us know in the comments. The crumbling economy of Pakistan has now discovered a ray of hope. As per reports, Pakistan has discovered a massive cache of antimony. Antimony is a rare earth metal used in industrial applications ranging from flame retardants to military equipment. Now, this discovery was made in Balochistan. It is a conflict-prone region but rich in minerals. The state-owned Oil and Gas Development Company Limited and Pakistan Mineral Development Corporation have formed a 50-50 joint venture to extract and process this metal. An official announcement regarding this was to be made in the Pakistan Mineral Investment Forum. Along with the antimony discovery, reports suggest that the country had also identified gold, copper, nickel and cobalt reserves in Gilgit-Balochistan. As per reports, the state-funded geological survey confirmed minerals in at least 10 newly discovered blocks in the region. Pakistan is also exploring advanced refining technologies from Oman to process antimony ore efficiently to enhance the mining capabilities. Industry experts believe that these new discoveries could help revive the cash-strapped economy, which has been facing high inflation, mounting debt, and rising commodity prices. But are these deposits so valuable? Well, antimony is a semi-metallic element primarily used in alloys to strengthen lead batteries. And we all know how rapid EV growth is right now. It is also fire resistant, so it makes it a key component in semiconductors and military equipment. Now, this is a very newly found opportunity to fix the struggling economy for Pakistan only if the mining process is a success and the funds are used wisely. What do you think of this situation? Let us know in the comments. When you think Japan, you think omurice, sushi, and all of this is made of rice. Even McDonald's burger buns have rice there. But the country is now facing a rice crisis. It looks like it is running short of rice. Japanese supermarkets imposed buying limits and restaurants were forced to increase prices. The Japanese government, in a rare move, has turned to its emergency stockpile and started auctioning rice 231,000 tons of it, 1/5 of the total reserves. It is not the first time it is doing this. During 2016 earthquake and 2011 earthquake and tsunami too, it had used its stockpile, but this is the first time it is doing it because of distribution issue. Reports say that 2 auctions have taken place so far. Now, the first bags of this reserve rice have hit the supermarkets now. Now, let's understand how rice is distributed in Japan. To keep prices high and support domestic farmers, Japan limits its rice production. Farmers sell to collecting agents who then sell to wholesalers. Shops and restaurants then purchase this rice from the wholesalers. Now, the government controls how much rice is produced and how is it grown. There are guidelines from the government for this. Now, last summer, Japan started facing a decline in rice supply. In 2023, experts say that extreme heat had damaged rice harvest too. And then from warnings of a devastating earthquake last August, there was panic buying. So last year, the average price of 60 kg bag of rice rose around 23,350 yen, which is 55% increase from the previous year. In March, a 5 kg bag of rice costed 4,077 yen, which is almost double the price from last year. As per the CPI data released by Japan at the end of January, price of rice rose by 71% year-on-year in Tokyo's 23 wards. In 2023, farmers had actually harvested over 180,000 tons more rice than they usually do, but collectors say that they were short of 230,000 tons of rice. So where did all that rice go? Could be logistics or hoarding during the multiple earthquakes hitting Japan. But there is also another problem that is impacting Japan's rice production. Rice growers are on a decline. The average age of a rice farmer is around 71 years and the number of farmers has fallen by 25% between 2015 to 2020 as per reports. But why? Japanese rice farmers don't want to pass on their unprofitable business to their children. They say that the rice prices are too low and farmers are at a loss. Rural population is also reducing and farmers want their children to earn more. So even if the demand rises and price stabilizes, who will grow the rice now? That's the question that Japan has to answer. But for now, all hopes are on the emergency stockpile for Japan's rice.
If you like this video, then like, share and subscribe to ET Now.